Good evening and welcome to the Strategy of the Week for Friday, the 22nd of November 2013. My name is Jerry D'Ambrosio, Senior Instructor here at VectorVest, and it's my pleasure to present your strategy this evening titled CI Up-and-Comers Supercharged. Earlier this year, Tompkins introduced a new cherry-picking technique for finding shares right as they begin to make strong, steady moves to higher prices. Tonight, I will review that technique along with the search that was created that helped simplify this process. I will then demonstrate a systematic trading plan that has produced 83% winning trades over the past 2 years. Let's move into the program and begin. I'll first move us into the Unisearch tool, and the search is located in the cherry picking folder, and you can see two searches here. The original search that Glenn demonstrated, CI Up-and-Comers, and CI Up-and-Comers Supercharged. I'm going to click on that one. I'm going to talk about the parameters in a second, but the reason why it's supercharged is because we changed the sort from VST to RT times CI. Now this sort brings to the top of the list the shares with the best combination of comfort index and relative timing. In other words, the shares found at the top have generally high-flying, smooth-sailing price performance. I'm first going to run it on some of our first GLB RT kicker signals we received this year, and then talk about the pattern that we are wanting to see. I'm going to change the date up at the top to one of our first GLB RT kicker signals. I'll use our quick dates just to show. First signal that we received was on the 2nd of January of this year. I'll go ahead and run that scan. You can see we'd only found 2 stocks. Now again, I'll talk about the parameters in a moment, but the parameters are very stringent. This search rarely returns 10, 15 stocks, but when it does return stocks, these stocks, as you'll see later, tend to be really big winners. I'm going to come up to the top right. Let's graph those top 2 stocks. And what we're seeing here is the price of TGA at the top, and I've added comfort index to the bottom of the graph. I'm going to come back here and select the 2nd of January, the date that we ran the search. You can see that CI had just been rising from a lower level. Over the past month it crossed above 1, and you can see that it's starting to build momentum. And with high CI stocks, and this CI currently is at 1.37, and with high CI shares, you're looking at shares that really have an ability to resist long or lengthy downturns. These high CI shares exhibit tremendous price growth persistence. Some people feel, though, when the CI gets to 1.7, 1.8, that the share has already had its run, and they're a little hesitant about pulling the trigger at that point. They want to find these shares earlier on in their run. And a great technique to help determine the true direction of anything, whether it be price or any indicator, is to use moving averages. So what we did is we added a 10-day moving average and a 20-day moving average to comfort index. And the pattern that we were looking for is this pattern here. We wanted all 3 indicators, the CI, the 10-day, and the 20-day, to be fanning out, to be spreading apart. This let us know that, in fact, momentum was building, and this is where we want our entry to be. And you can see that on the 2nd of January, we found this share at right around $2. It's currently at $2.28. It actually hit a high of $2.65 on the 13th of November. I'm going to move us down to the next one. Now this one was beautiful, and we actually found this share even before it made its explosive move to higher prices. CI coming off a lower level, all 3 indicators here starting to fan out and separate, and the stock was just steadily rising. This gave us an indication of increasing momentum, and you can see we found this one at right around $1.95. It's currently at $4.71. I'm going to close this graph. I'm going to take the date just a few days later to the 9th of January. That was the next GLB signal. It found TGA again, but it also found SEK. Let me go ahead and graph that share. And right around here, on the 9th of January, is when we found this share. You can see all 3 lines are starting to build momentum. The fanning action occurred. We found this at $7.22. It's currently at $12.25. So that's the pattern that we were looking for, and that's the pattern that Glenn demonstrated back in February when he first introduced this cherry-picking technique. I'm going to close out of the graph. Now let me review the parameters for this search, because this makes life a lot easier for you. You don't have to look at graph after graph in order to find these potential big winners. Now, because this search uses custom moving averages, you do need ProTrader in order to have access to the scan. The ability to add custom moving averages to a graph, like I just showed you, comes standard with VectorVest. Everybody can do that. But the ability to create custom moving averages and then search for them comes with the ProTrader module. Like I mentioned in the timing section, we are offering a free 2-week trial to ProTrader, and we'll take $100 off the regular price after the trial. So let me talk about the parameters. First, we're looking for some liquidity. We want the average volume to be greater than 25,000 shares. We want the stock sales growth rate to be greater than 0, so we want it to be positive. This ensures that these companies have a product that people are interested in. 4 weeks ago, we want the CI to be less than 1, so we want to favor shares that are coming off lower levels and whose CI hasn't quite become favorable yet. 3 weeks ago, we want the CI to be near 1. Now that's 10% of 1, 5% above or 5% below. 2 weeks ago, we want the 10-day moving average on the comfort index to be near 1. The time of search, we want the 20-day moving average on the CI to be near 1 as well. And this will help create that fanning action, which gives us an indication at least that upward momentum is starting to build. Time of search, we want the comfort index to be greater than the 10-day, and we also want the 10-day to be greater than the 20-day. So the search, as you can see, really takes the work out of trying to find shares whose comfort index has just begun to turn favorable and that hasn't reached those 1.7, 1.8 levels yet. Again, a lot of investors feel that when a share's CI reaches those levels, it's way too late to join the party. They feel that those shares have already made their run. Well, as you can see, CI Up-and-Comers Supercharged finds them much, much earlier. And you can use this technique, folks, on virtually any list of stocks. You can use it in the stock viewer or even on a watch list that you've created. Let me move us into the backtester to show you some research that I conducted using the CI Up-and-Comers Supercharged search. I'll come up to the top, click on Backtester, and here you can see CI Up-and-Comers Supercharged. I used the GLB RT Kicker timing system for my research. You can see we had a gain of 71% over that year and 11-month time period, with 38% annualized, but less than a 7% drawdown, a 6.5% drawdown. So with an annualized rate of return of 38% with only a 6% drawdown, that is fantastic. And if I take off the GLB RT kickers, you can see nice, smooth, steady equity curve. Once a share CI goes above 1 and stays above 1, you rarely get a lot of volatility with that share. Their price performance is steady and not very erratic. What I like even more about the annualized rate of return compared to the max drawdown is the percentage of winners. It found 83.33% winning trades. And let me come up here, click on Edit, just to talk about some of the settings here. Again, I used the GLB RT Kicker market timing signal, and everybody has the backtester, but this section here, this ability to use market timing in a backtest and have your research automated, comes with our Auto Tester add-on module. Auto Tester is also a one-time fee. Like I mentioned earlier in the VectorVest views, we are offering a free 2-week trial to it, and we will take $100 off the regular price. And this tool right here is the most important tool in helping you develop a systematic trading plan. Try them both out for a few weeks, and at the end of that 2 weeks, you will know if this is something that you'll need. Automation rules for the up situation. I use the CI Up-and-Comers Supercharged. I use the 50% gain or a 10% loss to exit positions. I'll click on More Settings. I wanted to maintain 5 positions. I automatically replace closed positions, only though when an up situation was signaled. I opened all 5 immediately. I didn't want to close any open position anytime an up situation was given. I don't want to repurchase a stock that I currently own. I want to save all my buying power for replacement positions, stocks I don't own. And I set the maximum percent of a stock's average volume down to 2%. Automation rules for the down, I went to cash. Automation rules for neutral, I took no action, and there's my test period there. And if I click on reports, go to situational summary report, you can see our annualized rate of return of 38%. Now, over this year and 11-month time period, the VectorVest composite annualized rate of return was less than 8% at 7.74. So we greatly outperformed the market, almost by a factor of 5. 60% winning campaigns. again, with 83% winning trades. Now we had 20 winners and 4 losers. Now you might think that that's not a lot of trades. And over a year and 11th month time period, it's really not. It's just about a little over a trade a month. And I mentioned earlier in the Unisearch tool that the parameters are very stringent. They're very strict. So it rarely finds 5, 10, 15 stocks all at once. So would you go out and put your entire portfolio into this methodology? I'm not so sure. This is something that with a $10,000, $15,000 initial investment, you can grow that initial investment very nicely, sleep well at night with a very low drawdown, and you can see 20 winners, 4 losers for an 83% winning trade percentage. Now, if you told me that I can walk into a casino and win 83% of the time, I don't care what game it is, I'm playing. And you'll notice at the bottom, again, 6.6% drawdown with a CalMAR ratio of 5. CalMAR ratio measures the reward to risk profile of a trading plan, and it looks at the compounded rate of return compared to the max drawdown. So with a 5.06 CalMAR ratio, you basically have a 5-to-1 reward to risk profile here with this system. And if I close this, we'll look at one more report. We'll look at the trade history, and I'll scroll over to the right. Again, not many trades, only 24 trades, but we had 20 winners and 4 losers, and our biggest loser was only down 9.45%. And again, I just wanted to reiterate that the shares found from this search aren't all that liquid, so this technique should probably be used with a smaller initial investment. Now, some of you may have dividend-paying portfolios. Some of you have portfolios maybe that trade options. Some of you have long-term retirement funds. Maybe you manage a self-managed super fund. This here could just be another weapon to put in your investing and trading arsenal. Well, this concludes tonight's Strategy of the Week presentation. I hope you all enjoyed it. Everyone have a great weekend.